Imagine walking into a giant airport without signs, maps, or instructions. That's exactly what Binance feels like to most people the first time they open it. And yet, millions of people use it every single day. So before you click random buttons and hope for the best, let's slow down and actually understand what Binance is and why it exists. If you want to use crypto seriously, not like a gambler, hit subscribe now and stay with me, because this will save you money and stress. Disclaimer: this content is for informational purposes only and does not constitute financial or legal advice. Now let's start from the basics. Binance is a centralized cryptocurrency exchange. That means it's a platform where you can buy, sell, trade, and store cryptocurrencies, while a company manages the infrastructure behind it. Think of Binance like a digital bank mixed with a stock exchange, but for crypto. Instead of euros or dollars, you deal with Bitcoin, Ethereum, and thousands of other digital assets. When you use Binance, you're not trading directly with another person. You're trading through an order book where buyers and sellers meet automatically. This is important because it means Binance doesn't magically set prices. Prices move because people are buying and selling in real time. Now here's a mistake beginners make. They think Binance is an investment. It's not. Binance is just a tool. A powerful one, but still just a tool. If you don't know how to use it, it can hurt you. One of the main reasons Binance exists is liquidity. Liquidity means you can enter and exit trades quickly without crazy price changes. That's why large traders use Binance. Lots of volume, tight spreads, fast execution. But with great power comes, more ways to mess things up. When you open Binance for the first time, you'll notice it looks overwhelming. Charts, buttons, tabs, numbers everywhere. That's not because it's complicated, it's because it's built for different levels of users. At the most basic level, Binance allows you to buy crypto with fiat, convert crypto, instantly store assets in a custodial wallet. This is where beginners should start. But Binance also offers spot trading, futures, trading, margin trading, staking, earn products. And this is where people get into trouble. Just because a button exists doesn't mean you should click it. A quick reality check. More features don't mean more profits. They mean more responsibility. Let's talk about accounts and ownership, because this is critical. When your crypto is on Binance, you don't control the private keys. Binance does. That means you don't truly own the crypto in the pure blockchain sense. You own a claim to it. For trading, this is fine. For long-term storage, it's something you need to understand deeply. This is why people say, not your keys, not your coins. Binance is excellent for trading and liquidity. Cold wallets are better for long-term holding. Now let's touch on fees, because fees quietly eat profits. Binance charges trading fees, withdrawal fees, futures funding fees. Most beginners don't even notice them at first, but over time, they add up. The smart move is to always check maker versus taker fees. Withdrawal costs per network funding rates if you ever touch futures. If you don't understand fees, you're trading blind. Here's something most people never think about. Binance is not the same in every country. Rules, features, and limits can change depending on where you live. That's why verification, limits, and available services may differ. Ignoring this can freeze your account or block withdrawals. And yes, it happens more often than people admit. At this point, you should understand, Binance is not scary, but it demands respect. If you treat it like a casino, it will punish you. If you treat it like a professional tool, it can work in your favor. If this is already helping you see Binance differently, leave a comment or drop a like. It tells me to go deeper in the next part. Now that you understand what Binance really is, let's talk about how to actually use it without hurting yourself. Because the truth is simple, most losses don't happen because people chose the wrong coin. They happen because people use the platform the wrong way. Let's start with the most important rule. Security first, always. The moment you open a Binance account, your first job is not trading. Your first job is protection. That means strong passwords, two-factor authentication, and never using the same email password combo you use everywhere else. Sounds boring, but boring keeps your money safe. 1 week login is all it takes. Next, verification. A lot of people rush through KYC like it's a nuisance, but incomplete or incorrect verification can block withdrawals at the worst possible moment. Always double-check your identity info and make sure your account limits are clear to you, especially if you plan to move serious amounts later. Now let's talk about wallets inside Binance, because this confuses almost everyone. Binance doesn't have one wallet. It has multiple internal wallets. Spot wallet, funding, wallet, futures, wallet, earn wallet. Moving funds between them is instant, but only if you understand where your money actually is. Many beginners panic because they think funds disappeared. In reality, they're just sitting in the wrong wallet. Before trading, always confirm which wallet you're using, which market you're trading, which asset you're actually holding. Sounds basic, but mistakes here are shockingly common. Now let's get into spot trading, because this is where most people should stay. Spot trading means you're buying real crypto at real prices. No leverage, no borrowing, no time bombs. If you buy Bitcoin on spot, you own Bitcoin. Simple? The two most common order types you'll see are market orders and limit orders. Market orders execute immediately, but you accept the current price. Limit orders let you choose your price, but they may not fill instantly. Beginners love market orders because they feel fast. Professionals prefer limit orders because they control costs. Speed feels good. Control makes money. Now a critical warning. Futures trading is not an upgrade. It's not next level. It's a completely different game. Leverage magnifies gains, but it magnifies losses faster. That's how accounts get wiped in minutes. If you don't fully understand liquidation, funding rates, and position sizing, futures trading will punish you brutally. There's no shame in avoiding it. In fact, that's usually the smarter move. Another silent killer is overtrading. Binance is open 24/7. That doesn't mean you should be active 24/7. Every trade has a fee. Every decision carries risk. More trades do not equal more profits. They often equal more mistakes. A calm trader beats an excited one every time. Let's talk about withdrawals, because this is where people lose funds permanently. Before withdrawing crypto, always check the correct network, the destination address, whether the receiving wallet supports that network. Sending crypto to the wrong network is not a small mistake. It's often irreversible. Double-checking takes 30 seconds. Recovering lost funds can be impossible. Now, something most people never think about. Binance is not your long-term vault. It's excellent for trading, converting, and moving liquidity. But holding large amounts long-term on any exchange carries risk. Exchanges are businesses. Businesses face regulations, freezes, hacks, and restrictions. A smart strategy is balance. Trade on exchanges. Store long-term holdings in private wallets. That's not paranoia. That's maturity. If you've made it this far, you already know more than most users who open Binance and start clicking randomly. And that's the real edge. Understanding the tool doesn't guarantee profits, but misunderstanding it almost guarantees losses. If this video helped you see Binance clearly instead of emotionally, subscribe and leave a comment. Tell me what part confused you the most, and I'll break it down in the next video. Because in crypto, knowledge doesn't just feel good, it protects your money.